Take it away.
Hey guys, thank you. And I did change my name back to the real me. I am not as good looking and successful as Phil is, so I have to
Stop
go
it.
back down to where I am in the ranks of this world. So I feel a lot more comfortable now. And so thank you guys, and so good to see a lot of familiar names and faces. We've had a couple of Zooms with a lot of you here, Meg and Prasanna's team, over the last month. So that was a great time. And Netra, you just issued a nice, really nice case with us. So thank you, and we appreciate the support and the business and the trust that you have with us for your customers. So. Um, I got a couple of great things that I wanted to share with you, and one of them is an actual claim that just came in. I just found out about this claim 2 weeks ago. And so I feel like sometimes we lose focus of what these products actually do. And it's not all about cash value. At the end of the day, it's protection, which you're signing up for. And so I got a couple of slides to share. And earlier this day, I had a lunch meeting, and a couple of hours ago, and the question came up, like, where does National Life Group fit? Like, I have a number of carriers that I can use. Where do you guys fit, and where can you help me? And can you tell me about your customer base, your typical customer. And so that question comes up often, and it really should get you to think about, because not every company is great at everything, right? So what we're great at is IUL and term, and that's our two biggest things. We also have number three, and the number three spot is a whole life contract. So if you have any customers, or if you yourself would like to position whole life uh, over IUL, we could go to that too. All right. So we do have a whole life product that accumulates cash, that has the living benefits. And so wherever your customer wants to go, whether they wanted the upside in the cash value, or the more so in the guarantee and the safety of the whole life product, we can absolutely go that route as well. But most of our customers are under the accumulation umbrella, right? So they buy our IUL products for obviously protection. They need the life insurance protection, but accumulation is a focus for them. And that's our biggest sale at the company. Between the ages of 30 and 50, usually that's where our biggest customer base is. Our second biggest customer base is under the ages of 18. Right? So that is your juveniles, right? I had a call earlier this morning with an agent saying, "Hey, I have a grandparent who wants to buy and pay for the insurance of their grandchildren." Yeah, absolutely. They can absolutely do that. And by the way, do you know if the parents are insured by any chance? If the grandfather or grandparents are in the giving mood that everyone is in this holiday season, maybe we can set something up for the parents, which is their kids. And so I just got a text that says, "Hey, we got a call, and the grandparents are likely going to be able to fund, and they're looking to actually fund not only for the grandchildren, but for their kids too." So you'd be surprised what happens and what opportunities that brings up when you talk to the grandparents about their grandchildren and how they're gifting, or what kind of gifts they give them, financial gifts. And by taking those financial gifts and leveraging them in the life insurance policy, you can really position that in a very strong format. So let me stop talking. Let me start sharing. I think you're going to get a lot of great things from today. The thing that we have not done well as an industry is share the successful scenarios and family situations that our products have been able to solve, right? And some of the stats that you see on your screen are really eye-opening. Um, a stroke every 4 seconds in the US, 4 in 10 Americans are, on average, will develop some sort of cancer in our lifetime. It's scary with what's out there, right? And what we have to deal with, not only just from a day-to-day thing, but down the road, and being able to live life today, but still plan for the future, right? One of the most eye-opening ones is this cost for Alzheimer's care. right? Um, on average, almost $400,000 cost for some dealing with somebody and somebody with Alzheimer's, right? And it's not just a cost out of pocket for care, for medicine. It's also what also goes into this number, what people don't realize is if you have to stop working, you leave your job early, you have to leave a week out of the month and go somewhere. Um, that also eliminates, vacation or maybe even a loss of income if you're in a sales related or position, right? So that also goes into this number, and it's incredible and scary, like I said, to see what the cost is. And that's just today's cost, guys. Think of what these numbers will look like in 10, 20 years with inflation and just the natural increase of prices that we deal with in America, right? Um, it's really, really scary, and you have ways to deal with it, right? You either deal with it yourself or with government help, or I guess with the help of family, right? Um, and so I'm dealing with that right now with my grandparents, with my grandmother, and I'm seeing my aunts and uncles and my parents having to find care for her. I having to chip in, right? And so it's trickles down not just to the next generation, but the one below too. It's scary to see how much this affects people across the board. Um, what we love to brag about are the benefits that we have in our policies, right? These are all the benefits we have on term, and we have it on our IUL too. We have it on our whole life product. These benefits really do a great job of positioning life insurance not for the worst case scenario, right? But also of the unexpected. Nobody expects to have to deal with these things on the left hand side, right? Nobody goes to work thinking, "Hey, let me set some money aside for a future cancer I may have or a stroke that I may have, or Alzheimer's," right? But this is all things that we need to worry about. And if you take care of it today, you're set up for the future. These five riders that we have on all, like I mentioned, all of our policies. In addition, the fertility rider that we have here, we'll talk about it in a second. But there's six benefits that we have, and I have a story to share with you on a critical illness rider in just a second. But one that we're really, really proud of is this Alzheimer's rider. We just introduced that 2 years ago, right? And it's so good. Even the state of California approved it in a very, very fast manner. So, and our customers in California have it. And so, every state in this country has this rider, and so we're approved across the board. So really, when you look at carrier wise, you have National Life as a carrier that believes in permanent insurance. We believe in term insurance, and we believe in using your life insurance policy for the unexpected and not just the worst case scenario. So critical illness, and I welcome any questions over the chat box, or if you just unmute yourself. Critical illness is a rider that covers 13 specific illnesses. It's all on cancer, heart attack, stroke, ALS, a number of different illnesses. And cancer is the number one factor trigger that we have under this rider. So I wanted to share with you a story of an actual client. Okay, this is a customer or a client of ours that took out an IUL back in 2015. They were 47 years old, and the death benefit on that policy was $500,000. So they were funding it pretty heavily over the years, right? 10, almost 9 years, almost 10 years of this policy being active. Um, Back in February, this customer was feeling some pain in his midsection, went to the doctor. Doctor said, "Look, you got to go to get some scans." Got some scans from the ER. ER came back with the scans and the worst possible news, diagnosed with liver cancer. And so it was a very, very tough thing he's got to overcome now, right? So what he did is he remembered his policy, and luckily he still communicated with his agent. 9 years later, this person was still communicating with their agent, which is great. We love hearing that. And so what this person did was filed a claim, right, under the critical illness. Cancer is one of those triggers that I mentioned earlier. And so they applied for the critical illness ABR claim. So we get the records back from the doctor in the hospital. It's very low stage. So we called it a category two. And just so you know, there's four categories. Category four is the most severe. And so if the illness is very severe, it'll be a category four. This one wasn't so severe with on his body. So category two is what the payout was considered. And this person was actually in a very good financial position. They had money saved up, they had health insurance. So they said, you know what, I'm not coming out of pocket right now. I got some disability, ding, 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 disability um, at work that I can use during this time period. So he didn't even need the money. So which is great. A lot of times we have people that have the need the funds immediately, and we work with them and we get them their money as quickly as possible. But this person didn't need the funds, so he waited. He goes, "I don't need any money. Can you just wait? I'll come back to you once I need it." And so, unfortunately, it got severe. The cancers kept going and going, and now it went up a couple of stages, maybe one or two, I can't remember. But regardless, that took after the new records came in, we were able to take that payout from a category two to a category three. So now he's getting more of a payout, and now he needs the extra more funds. Okay. So now we're in November, actually October. This was before, like I said, this was 2 weeks ago when he came back to us and said, I want to take the payout, excuse me, for the category three claim. And so just to give you an idea of numbers, category one would have paid out this customer $190,000 tax free. Category three, by waiting, he's able to get a check for $290,000. So by waiting and not taking the claim out right away, he had the liberty to do this. Okay. He was able to get an extra $100,000 because his situation got worse. And so he's right now deciding on what he wants, whether he wants a full money or a partial. Now he still has a wife, he still has a daughter listed as beneficiary, so I think he's going to take the partial payout. But just the fact that he has access to this, I can't imagine what he's been dealing with since February. The emotional and financial pain that this has brought the family, this is going to bring a sign of relief, right? And this person was young. He's 57 years old with this terrible form of cancer. I saw someone unmute themselves. I want to make sure we get your question. Okay, so it was a incredible story, and I welcome you to use this with your customers because this happens all over the country, right? Last year, just to give you an idea, we paid out over $98 million of these types of claims. So that story I just told you about, that equated to over $98 million last year. I wouldn't be surprised if this year we've paid out over 100 million. Because keep getting more customers and the customers get older, right? So things happen. Any questions, comments, thoughts on this story? This is one where I welcome you and I encourage you to use when you meet with people. They think this is too good to be true. Tell them the story. Go to YouTube and Google National Life Group. We have 5 stories on the YouTube channel.
I was going to say, Marco, just to offer the couple zingers that you said in there too, that I think is important for people to understand is that the client still talked to their agent. And so, secretly the conversation that we always have is that your network is your net worth. So how often are you following up with your clients, reminding them what they purchased, what options they have, and doing simple policy review will keep them or keep you at the top of mind with your customers all the time, especially for something like this. For those who remember it at the initial point of sale or for 9 years later, I mean, I don't even remember what happened 9 months ago, let alone 9 years ago. So I think that just shows the proper expectation that a client should have with their agent. And once again, what we're trying to portray in this industry is that noble profession, the ability to stay there with your clients, the ability to offer that solution. And so they're not calling the 800 number as an orphaned account because their agent went missing. There's a relationship. And I think that's the most important part. So that's a really good story, Marco.
Yeah, thank you. Thank you. But you're right, Phil. I hear about these claim stories and I always ask, is there an agent involved? You'd be surprised how many times the answer is no. Um, but to each their own. We're all business owners and we can run our business how we want. Phil just gave you a great way to run yours. All right, if there's no more comments, I'm going to switch to the next one. I want to go to the IUL story now. I was actually having this conversation with on the Zoom that I did with Meg and Prasanna, I think when did we talk about IUL? Last week. And it was around the using the right product. And so when you look at our IUL, right, Flex Life, LSW Flex Life is our go-to. And especially for clients that live in outside of the New York, sorry, tripping over my words. For clients that live outside of New York, you want to use the LSW brand. And for clients, if you have clients that live in New York and you have to write the application in New York, you want to use the NL brand. So LSW stands for Life Insurance Company in the Southwest. NL stands for National Life. Both companies are under the National Life Triangle. Okay. And so it's still National Life Group, but for insurance purposes, we have to use a different company outside of New York than you do inside of New York. And so use the LSW for term, for whole life, for IUL, if you are running clients outside of the state of New York. LSW is your go-to, and Flex Life, you want to use that for customers that are underneath $1 million of face amount. That's where the strong suit is for that product, the Flex Life product. If you have clients who need more than $1 million of IUL coverage, or they have so much premium they're putting into the policy that it just drives it up above $1 million, you're going to be more happy with the Summit Life product and the performance of the Summit Life on the cash value versus the Flex Life. So that is a little background on that. And we have all the if you however creative or down to the details you want to get with index strategies, we have them all. The S&P 500, right? That's one of the biggest ones that we see used at the company. And then on the life insurance side, we have the US Paysetter and the Global Balance Index that we have. One of them is focused on US assets, the other one on global assets. So I can send out an email with information about these to kind of give you more detail. But regardless of what you like to present to customers or what you prefer, we can suit those needs. My personal policy, I just got my second IUL earlier this year in March. I did 100% in the S&P 500. Sorry, I did 30% in the S&P 500, 30 in the Paysetter, and then the rest of it in the Balance Index. So 40%, right? So I did a balance approach into all three of them. That's just my opinion. It's what I did. I like all three of them. And so I'm going to use all three. But however, if you want to go all S&P, you have that option too. If you want to focus on just US or global assets, you have the ability to do so as well. And on the topic of IUL, in my lunch break I had earlier today, I met with an agent, right? And then uh, right before literally right before I got to the restaurant a little early because I wanted to answer emails and respond to text messages. So I just sat at the bar waiting for people, waiting for my folks to come in, and then I started talking to this person next to me, and I overheard him. A reason why I asked him is because he had a statement of his life insurance policy, and I saw a logo of an insurance company, and so it wasn't with National Life Group, it was with another company, and he was at the bar drinking a glass of wine at 1 p.m. Like it was like 12:30. And and so I joked to him, I looked to him, I go, does looking at life insurance statements make you want to drink? Because we have something in common if that's the case. And he laughed. He laughed, and so I started talking to him, and he asked me why I brought that up, and I go, well, look, I mean, I see the logo on your on the piece of paper in front of you. I know that company. I'm technically a competitor, even though we're different products, but I know that company. I work with an insurance company. And he started asking me, he goes like, hey, well, maybe give me your thoughts. Do you really think whole life is worth it? And I go, what do you mean by that? Tell me about your scenario. What do you have in front of you? It's a statement for a term. He had a $2 million term, and his agent is trying to get him to convert it to a whole life product. And he's talking to him about it. He's like, man, my premiums are gonna go up like 3 times. Like it's very expensive. And then I had to go through it with him. And what I'm showing you on the screen is something that I literally drew out on a napkin in front of him. And I said, look, I do believe, and I'm a big fan of permanent insurance. Now the whole life with this company, that's a whole different story. But like, like we sell a lot of permanent insurance, and it's another flavor of permanent insurance. I go, but let me tell you where I see this fit perfectly in customers' portfolio and the clients that we see at the company where this fits in. And I literally drew this bucket. I didn't draw buckets, I drew circles. And I said, look, at the end of the day, you have a portfolio and you can break down the assets in your portfolio into three different categories. Things that are going to tax money that you have that's taxed today, money that's going to be taxed tomorrow, and taxed never, right? And I said, look, here are the most common ones. And in the first bucket, I just put in income. I didn't put anything else in. I put income. Income that you get is taxed today, right? Taxed tomorrow. The most popular is 401k and any IRA that you have. And then the tax never, I wrote muni, Roth accounts, and then I just wrote 7702. I go, which one are you? Give me tell me how you're spread out. And he goes, well, obviously my income, get that every 2 weeks. I got like 80-90% of my portfolio into this tax tomorrow. And then he goes, what about my brokerage account? What would that one be? I go, that's a great question. I'm glad you asked because it kind of goes in the middle between tax today and tax tomorrow. Anytime there's a trade, you're getting taxed, but it doesn't happen until the trade. So I go, your brokerage is kind of in the middle. And I go, what are you doing on this side? He goes, I'm not doing much. I go, well, then I think that's why you should look at this permanent policy as an option because this 7702 is the IRS code that I wrote out that says that permanent insurance and the cash value inside of it gives us tax benefits. And if you do it the right way and you take the loans out in the right way, and I know loans is a scary word, but trust me on this, and you never get taxed. You never get taxed on anything that you pull out, even if it's more than what you paid into it. And he understood that. Unfortunately, I did get his number, and then I passed it on to the agents that I was with, that I was meeting with. So yeah, so hopefully, something will come out of it. And so I say this because this is literally the oldest trick in the book of positioning insurance, life insurance, permanent life insurance as an asset to customers. It is not an expense. The expense is the expense, right? The cost of insurance, administrative expenses, yes, those come in and they're important. We have to pay for them. But what's left over goes inside your account, right? It goes inside your cash value, and that thing you're able to access that and leverage that for whatever reason. And I actually showed him. I literally took, and I just took a screenshot because I got an email last month for Morgan Stanley. This is where I have my brokerage account. On the topics of brokerage account, I said, look, my company just sent me this email. Um, I can get a line of credit from my brokerage account, right? I can get a line of credit from my brokerage account, and it's only up to the value that I have in that account. But look at this. I have to pay 7.6% annually of an interest rate. Um, and so that's not terrible, but it's also up there. I go, let me show you what I have in my personal policy. So I just busted out my phone and I got on my National Life app and I showed him I could have taken out a loan for my IUL right then and there at 4.7%. I go, forget brokerage versus life insurance. If you were to take out a loan right now, would you rather pay 7.6 for it or 4.7? You can't tell me you would rather pay 7.6 over 4.7. E-Trade would rather you pay for 7.6. But you as a customer, I'm going to challenge if you say 7.6. So this is another example to use is you can leverage this, right? The value inside of your account, your life insurance policy for anything. You can also leverage other assets, but at what cost? At what cost? So I'm going to stop sharing. I see a message there. Let's
Just
see.
that
Oh,
was
that was
me.
you, Phil.
Yeah, I was just saying that you could have passed on that referral to your brother from another mother here, but you give it to
Man,
those
if
other guys.
they already met me at they literally walked in when I was exchanging
Napkin.
information. So it couldn't have happened in a more awkward way.
Did they report back if they closed the deal or not? Or
They will. Yeah.
yeah,
That's
I
a
figured.
that's a must.
I know.
But but yeah, that's I hope you guys can see that's another this is all the talks of assets, right? We have to change the consumer mindset of expense. What they're paying into their 401k is they don't look at it as an expense. They look at it for down the road in retirement. This is another conversation to have. This is for down the road for emergencies, and you can use it in retirement as well. So feel free to use that example of the 7.6% because that's a real one. That landed in my inbox. I took a screenshot and I put it up on the slide right before this meeting.
That's the conf. I like that. So I was going to ask you, Marco, from a standpoint, are you done with show and tell, or did you have more?
Yeah, I'm good here.
Okay. Well, real quick, because as you can see with some of the last names and some of the first names, we deal a lot in the foreign national space. So if you could just touch on the value proposition of why NLG is an industry leader for the foreign national space, especially in the United States.
Yeah, no, thank you for that. That was my last point. And the phrase foreign national it means different things to different people. It even means different things to different insurance carriers. And so what we do is we have two categories, right? Foreign national.
Oh, gotcha. Oh, good.
So we have two categories, right? Foreign nationals and then domestic customers. Foreign nationals is really truly people who live outside of this country on a permanent basis, but they come here because they have financial ties to the country, right? Whether they have investments, homes, businesses, brokerage accounts. You'd be surprised how many people just come in here to invest in the U.S. stock market because it's the most stable stock market in the country, in the world. And so people have brokerage accounts. They're just here, right? So they have to come here. And so whatever financial assets they have, that's what we look for that clientele. They can't just come in here, come shopping, and then go back home or visit family and come back home. Not with us. We're looking for stronger financial ties. So that's one category where we do a lot of business in. And where we shine in that market is with our living benefits. So these living benefits that I just talked about are if the customer lives in a category A or category B country, we have these benefits on their policies. So I don't think a lot of people do. And so that's what we hear from the market is that they really enjoy those living benefits in those in from people in those countries. And it's pretty much with most of the bigger countries out in the country in the world that are in the category A and category B. And then when you look at the other bucket is domestic. So if a customer in the last 12 months has been in the US permanently for 8 out of those 12 months, we consider them a domestic customer. All right. I'll repeat that again. Go back 12 months from November of this year to November of last year. If the applicant has been in the country for at least 8 straight months, then we will look at them and underwrite them as a domestic customer. And so, do they have a social security number? They may not, which is fine. We'll take a tax ID number. Do they have a visa? It's not important to us. They are here permanently, right? They've been here for 8 out of the last 12 months, and they have the intentions of staying here permanently. And they may be on a work visa and they want to extend it later on down the road. We look at that as a customer who wants to be here permanently. Okay. So you think about it, there's customers who come here, individuals who come here on the work visa from different countries of this world to come work here in North Texas, in other parts of the country for a specific industry or for a specific company, right? These are companies that are putting these folks through the process, through the immigration process to extend their work visa and potentially become residents of this country. During that process, they still have exposure financially and they still have a family that they have to support. So getting the life insurance protection during the time period while that's going, as long as they hit the 8 out of the 12 months and they have intentions of permanently staying here, we can underwrite them as a domestic customer, which means you can do term, you can do IUL, you can do all the living benefits. As long as they qualify for it financially, we can go to that face amount. The biggest face amount I've seen with somebody who's not a resident of the United States, but is here with an ITIN number, is $5 million. That actually came from someone that we were in Cleveland with, Phil. So yeah, it's definitely possible, and that demographic, that market is someone who needs support, and we are here to provide it for them.
And you can do non-med up to,
Yeah, oh yeah, non-med as well. We can do up to $3 million under age 50 on our IUL. $3 million under age 50. Just to give you an idea, most of our business is under $1 million of face amount, right? Our biggest percentage of applications are under $1 million of face amount. 95% of our customers that we've approved this year have been approved under $1 million, have been approved without medical exams. 95%. So ages 50 or younger, a million or less of coverage, that customer base, 95% of them got approved without a medical exam.
okay, yeah. Monica, if you want to unmute, you have a question?
Yeah, thanks, Phil. Hey, Marco, this is Monica. So, I'm particularly interested in this side of the things, So, just wanted to understand, in your experience, have you seen anyone from India take this policy where the person is an Indian resident, Indian citizen, sitting in India, having a nexus with the US, whether it's in the form of some kind of investments, assets, or some kids, doing their college here? Have you seen a practical case where Indians have taken this kind of policy? I know India happens to be part of category C countries. That's what I read on one of the websites. So, if you could just throw some light on this.
Yeah, good question. And I'm pulling up the guide right now to see if I see anything in relation to the country of India. And I don't see anything. So you're right. So it is a category C country. And so what that means is it's on a case by case basis. It's on a case by case basis. Usually, what we look at in those scenarios, it's not an automatic no or an automatic yes. We look at what part of the country they live in, and so we will have to get more details to be able to say yes to that applicant. But you know what? You actually asked a good question. I have not seen, me personally, I have not seen or been a part of a sale that involves an Indian foreign national. But I am going to ask our foreign national director if we've seen that. I can't imagine we haven't. We've been in this program for over 15 years or right at 15 years. So I will ask and get back to the team on that one. That's a really good question.
Sure. And the reason why I ask is, because I happen to work a lot with my team back in India, and the sense that I'm getting is there are a lot of HNIs back in India, who have their assets here in the US, could possibly be interested in taking up an insurance here, whether it is as a legacy plan
Mhm.
or an estate planning because of the estate taxes here. I'm getting more into the eyelid structures and stuff like that. So insurance happens to be a very critical element there. And with India, a lot of millionaires, billionaires now popping up from that country. So which is why I just wanted to understand, because from an India perspective, I know there are certain restrictions. There's some approvals required, but I just wanted to understand if practically you've come across such cases, and which, the doability of this cross-border corridor, I guess.
Yeah, let me get back to you. I actually just texted my foreign national director and see what he gets back.
Sure.
I'll probably get back to you guys tomorrow morning. He loves
Thank
talking
you.
about this, so he'll probably call me tonight.
Yeah, that will
Yeah,
be really useful.
I'd light on that too, Marco. She's talking about like $5-10 million net worth people. So it's not
Mhm.
like, your mom and pop, run of the mill kind of thing. So uh all from the better parts, not the at risk kind of states
Yeah,
or whatnot. So Monica, if I'm speaking incorrectly, you can obviously correct me, but yeah, it's we're talking higher net worth individuals who have a strong nexus, whether, like you said, with a brokerage account, or kids here for college and things like that. So that's actually one of the interesting things is that yourself, some other competitors too, are grading India a little lower than anticipated versus some other carriers. And so, we've through conversations we've had with underwriters, they're starting to change it with certain
good.
carriers. I'll talk about the little woolly bear that we were with in Cleveland. I won't mention the company name, but you know what I'm talking about. Short stack. But nonetheless, there's people who are looking at India in a different light, given the economic renaissance, if you will, that's occurred recently.
Absolutely.
So yeah.
Yeah, I'm gonna take that one away. I'm gonna see what I can get back to you guys on that topic. Great scenario.
Also,
Net,
just
that
just on the same lines, we did have these questions come along, and what we got from that was that you have to be here to open up any of these policies. You can encash them if say you move back to India, but I feel you have to be here, because otherwise technically anybody, because it's a life insurance, right? You cannot be insured in some other country where you're not living. I mean, that's what it's something we got out of the thing. But again, I think, Marco, I think that'll be a great something if you can come back to us also. If somebody is living here and doing this right now, and say after retirement they are in India, how do you encash that? That is also actually one of the more questions that is asked, because that is a scenario that is more likely to happen
Hmm.
than less likely that people will sit there and, like, what Monica said was, it has to be high net, and they have just lot of because actually some of the millionaires in India, they can buy property here. But I think you have to be here in person, have a bank account, to hold a life insurance policy is something we got, from other providers. But
Yeah,
on the
that's
yeah,
true.
yeah, but on the other hand, if you are here working and say after retirement the laws change and you have to go back, then what happens? 401k, yes, it is your money, but then life insurance is something, since you're not living here, how does that work? And
Great,
how does it change in that scenario? That is something I think will
great
also be
question.
one of
Great
my
question.
questions.
So I've had that experience, and I'll speak for the personally. I've seen this play out. So we have. So you got to remember, insurance carriers underwrite for that moment in time. In that moment in time, they are living here permanently. They check the boxes. Then, then we give them the policy, right?
Correct.
And then let's say in 10 years, excuse me, they move back home, whatever country they're
Hmm.
from. As long as that policy stays active,
Mm-hmm.
right, then we continue to keep the policy active. So what happens? What needs to happen? You need to continue to pay your premiums, right? So as long as the premiums are coming in from a U.S. bank account, we can still apply the premiums to the policy. At time of death, we're going to need a death certificate. So whatever country that's coming from, you'll have to get it translated and then sent to us.
Hmm.
So yes, we have paid out a claim. I've seen this. It's one of the Central American countries. I can't remember which one, but a customer bought a policy with us 4 or 5 years ago, um, decides to go back to the home country and passed away. Well, we had to get the death certificate, we asked for a little bit more, just so we can know that it was a legitimate claim. And so then we paid out. And so it does we will pay out if even if they move back to their birth country or another
Right.
country.
And then, so
That
death,
come too.
in case of death, it's fine. I mean, it's done. But this was a more question, what if something happens, like, the story you just said about that guy who's 47, say something like that happens. So here it is easy because it's doctor's certificate and some reports in the US and you're claiming in US. If it is in some other country, how is it going to, because definitely the trust comes in there and we don't know how that country evaluates critical, in that country versus here, so that's
It's our
actually.
definition. So it's
Yes.
our definition. It's not the other country's definition. So if they have a living benefit claim, then it
Mm-hmm.
has to be, so that claim has to also be done in the US, right? So the claim for the living benefits, that person in the other country will have to come here
Hmm.
to do the claim, right? And
Got
so
it.
it has to be by a US physician, a US
Okay.
doctor that we get the records from.
Got it.
So
Okay.
it can't be someone authorized who, for example's sake, expat lives in India now and still holds a US license, so to speak, that won't count. They actually have to come
Correct.
back, correct?
They have to come back. And I know that
Okay.
for a fact. We've seen those scenarios too. You can start the claim outside of the US, but then we have to be verified that this is happening by a US doctor.
Gotcha.
Hmm.
I know
Okay.
you won't put it in, I know you won't put it in writing, but any special exceptions, like so someone has a heart attack, quadruple bypass, doctors say that you can't get on a plane for obvious reasons. What is there any like exception basis that could happen that I know wink wink won't be in writing, but could potentially help or
Not that
just
I've been a part of, honestly.
okay.
It's a legal thing where we have to, because we're not licensed in another country,
Sure.
so it gets complicated.
That's good. Yeah, I was gonna say, as long as you know. So Roshni asked, can I buy it for my parents who are in India and are on a green card? So Roshni, are they here on a green card or are they in India? If you want to unmute, you can. Might be easier just unmute. they're in India.
Yeah, they have to live here.
Yeah. The because I would say if you were in college and they were supporting you in college, that's a nexus to the tie to the United States. But because you're fully independent compared to them, there's no real nexus from that standpoint because there's no reliance on each other, so to speak. So that therein lies the situation from that standpoint. Um, but
Exactly.
yeah. To kind of piggyback off of what Magnus said too, though, with the claims, Marco, I know it's probably the same. If someone wants to take 7702 money, income, you guys will send a check or to a bank account, and they just have to convert it to the domestic currency. Is that accurate?
Yeah. Yep.
Okay.
Yeah, we'll send a check to an address. The address has to be here in the US, and then they can take it home back to their country however they want and
Okay.
convert it at that point.
Okay. Or a bank account like a Wells Fargo or something
Yeah.
like that. Okay. So that's good to know. Any last questions? I know we're butting up on time. So question, in case of disability, can the reports from Indian doctors sent to another US physician and it gets certified? Will that work?
No, it
Or
won't.
so they gotta be here.
Yeah, they have to be here.
See that?
Oh,
Everyone's
because
trying to find those loopholes,
think
you
about it.
know?
If I'm the US doctor, how do I know you're telling the truth?
Yeah.
Right? It has to be seen by a US doctor.
What if
Hey,
they slip you a
Marco.
rupee or two?
Yeah, sorry. I remember, about a couple of years back, this is with regard to one of the other providers. I don't want to name it, one of the other big providers. And I think one of the expats happened to go back to India and unfortunately he passed away. Whatever I understand is that that carrier had some appoint or, they had taken some doctor's report from the embassy, the US embassy in India, and it got it certified from there. And that's where, so the guy's family happened to get the claim in India based on the doctor's certificate in the embassy. So, because the reason why I asked this is
Was that
because
a death benefit claim or a living benefit
it
claim?
was a death benefit claim,
Yeah,
definitely,
death
so
benefit is different.
yes.
We
So
can do that too.
okay. So, the thing is, and this is a very standard question which comes with a lot of, immigrants here in the US, because,
Mhm.
uh, I would say more often than not, they want to move back to India, and if living benefits claim is an issue, then, probably it's an issue which needs to be tackled, smartly with these clients, because it could be then a non-starter, because living benefits happens to be one of the main reasons why, we are selling these policies, besides, of course, the death benefit. So, um, yeah, I mean, if there is any, if we can crack this issue, I think it would be I would say it's. Is there anything else that you can think about? How do we really crack?
National Life Group would have to be licensed in India, and I don't know if that's going to happen. So these are very complicated scenarios.
Yeah,
So
yeah. I
I
guess
say, do
that.
you
Yes.
really want to move back? Come on. It's great here. No, I was gonna say,
I get it. I understand.
yeah. Any last question, comment? So not seeing any in the chat. What I'll say is again, just use the time real quickly to say, first off, Marco, as always, thank you for the partnership. Thank you for everything. And looking forward to a strong 25. For those on the call, just remember next week we have 2 weeks in a row of disability. So Todd Shield from North Central DI, one of our referral partners or business partners who clears through 3 Mark, will come in to talk about disability, mainly how to get started with it. Then the next week is blue collar, white collar, 2 different types of collars that people can have. Break for Thanksgiving, 2 more business DI, and then some sales ideas. And then we're going to do a State of the Union for what we have coming up with Valor. And then we're going to break for the rest of the year. So that is the rest of the year coming up from a training perspective. Be on the lookout for those, trainings. And then we're going to have a special training on, not really a training, but an introduction to our RISE partnership program. Again, regional insurance solutions executives, coming up on the 21st of November at 12 o'clock. So, a lot of great stuff happening. Marco, thank you again. You guys have a great rest of your day, rest of your weekend, coming up, and we'll
Thank
talk
you,
soon.
guys.
Bye.